Polycab, when there was an income tax raid and there was an unaccounted cash that they found from the premises, stock fell about 21% in one day. So, these red flags are to be looked at, and you have to identify them early on in terms of which companies are reliable, which are not, or where there can be an issues on governance. You do not participate, otherwise the losses are very, very real, as we see on the screen. Again, there are more examples like Jet Airways or Eveready Industries or Lakshmi Vilas Bank. When there were news came out in terms of something wrong on governance, we have seen big fall in prices. For example, Jet Airways, which was once a much followed stock, when there were issues of CBI investigation against the promoters of siphoning money, the stock fell about 79% and 51% in just 1 month. So losses can be very, very real. These events tend to be binary in nature. Until it occurs, everything looks good. But once it occurs, you lose out a lot of capital invested into those companies. So no, it can't be that attitude that जब भी होगा तभी देखा जाएगा kind of thing. You have to have an eye for what can go wrong in these companies, and there are always some or the other data points that suggest not everything is right. Everyone would remember Satyam Computers, right? In 2009, Mr. Raju sent a fax to the stock exchanges that I was riding a tiger. And we were always suspect of governance of Satyam, and we never invested in that company even before, when it was darling of the stock markets, part of the index, etc. We never participated because there was suspect governance, and our channel checks, ground checks suggested that things were not tallying for that company when it came to cash flows. So there are always signs that you need to look out for and not participate in such companies, because there are opportunities outside. There are cleaner, good companies that you can invest into and still make a decent amount of return from the stock market. Coming to valuation that we spoke about, it's very important barometer. People would come and tell you that look at 10-year median. We are trading at 10-year median. It's fantastic. Markets have come down. It's a great time to invest. But 10-year median has been in that lofty market per se, right? If you look at, for example, large cap, 24.6 times PE, 10-year median is also 24. So it's in line. But if you look at a 20-year, increase your horizon, it's at 21 versus 24. So it's still not cheap per se, or not in line with a very long-term median multiple. Of course, things have become better over last 1 year, but I wouldn't say it's a cheap market. You have to look at not the overall market, but opportunities where there is growth and valuations are reasonable.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.